All right, today we're diving into some serious drama happening in the world of finance. It's a story with everything: ambition, a fight for survival, and a plot twist you probably won't see coming. So let's get right into it. And this quote, it just nails the vibe. We're not talking about boring spreadsheets here. This is a full-blown saga with big personalities, huge amounts of money, and yeah, some serious shade being thrown. The battle for your wallet is getting very spicy.
And every good drama needs its main characters. So first up, we've got PicPay, the ambitious challenger coming out of Brazil. Then there's the OG, PayPal, the struggling giant that's trying to find its cool again. And finally, our wild card, Citi, the old-school institution from Wall Street making a really surprising move.
Okay, let's kick things off with our challenger. We're calling this PicPay's billion-dollar glow-up. And you're about to see exactly why. This is the story of a Brazilian fintech sensation stepping onto the world stage. So here's the headline move. PicPay is filing for a US IPO to raise a cool $500 million. And they're reportedly aiming for the NASDAQ. This is them basically shouting from the rooftops that they are ready to play in the big leagues.
So why should anyone on Wall Street care? Well, this number right here is why. 34 million. And get this, that's not a future goal or some projection. That's how many active users they have right now. This is a legit powerhouse, not just another flash-in-the-pan startup.
So what even is PicPay? It's what's known as a super app. It's way more than just a way to send money. It combines digital payments, social features, and even business tools all into one single application. The analogy here is perfect. It's like if Venmo and WhatsApp had a baby, but with a heavy Brazilian accent.
And make no mistake, this is all about ambition. They watched their Brazilian rival Nubank have this massive successful IPO. And now PicPay is basically raising its hand and yelling, "Hey investors, look over here, we're next." They're betting they can be the blockbuster sequel.
All right, so while PicPay is having its big glow-up moment, our next character is in a totally different spot. Let's talk about the established giant, PayPal, and its big fight just to stay relevant. And yikes, this is a tough look. Goldman Sachs just slapped a sell rating on them. When a name like Goldman does that, it's Wall Street's way of saying, yeah, we're not buying what you're selling. They're pointing to execution risks, which is just a fancy way of saying they don't think PayPal can actually pull off its comeback plan. But this is where the plot gets really interesting. Check out this number, over 400 million. That's how many active users PayPal has. We're talking about a massive, globally recognized brand here. So what's the deal? What's the problem? Well, here's the problem. Even with all those hundreds of millions of users, the stock has tanked more than 20% this year. It's trading at prices we haven't seen since 2017. And that is the huge disconnect. How can a company this big be struggling so much with investors? I mean, on the one hand, the numbers are just incredible. $1.5 trillion in payments every year, new AI features, a brand everyone on Earth knows. But on the other hand, growth has just stalled, and the competition from Apple, Block, and Stripe is absolutely relentless. They're getting squeezed. And honestly, this quote just says it all. PayPal's growth feels like your dad's Facebook account. Yeah, it's still active, but it's definitely not trending. And in the super fast-moving world of fintech, if you're not trending, you are in a dangerous, dangerous place.
Okay, on to our third and final act. And this one is the plot twist. Let's talk about the cautious convert, the old-school giant Citigroup who, believe it or not, is suddenly crashing the crypto party.
Now, just to really put this in perspective for you, look at this number, 212. That's how many years Citi has been around. This is not some nimble little startup. This is a pillar of what people call TradFi, or traditional finance. They are quite literally the establishment. And yet, here they are, officially jumping into crypto. They're launching a service for their big money institutional clients so they can safely store digital assets like Bitcoin and Ether. You have to understand, this is a massive signal to the rest of the market. And this didn't just happen overnight. Not too long ago, their attitude was basically, making fun of NFTs in the break room. But behind the scenes, they've been quietly testing the waters. And now they're making a formal public move for 2026. It's a slow, deliberate, but very serious shift in strategy. So why does this matter so much? Because it shows that the old guard is not just going to sit back and let the disruptors have all the fun.
When a titan like Citi makes a move like this, they're signaling that they want to own the infrastructure, the actual rails of our digital financial future. The lines are blurring big time.
All right, let's pull all of these threads together. We've seen the up-and-coming challenger, the struggling giant, and the surprising convert. So what on earth does all this mean for the future of your wallet? So, to recap our players in this whole drama, you've got PicPay, the challenger that really wants to be the next Nubank. Then there's PayPal, the giant that's basically fighting to win back affection and prove it's still cool. And finally, you've got Citi, showing up fashionably late to the crypto party, but hey, they're here. Which brings us back to the main event, the challenger, the giant, and the convert. They represent these huge forces clashing for control. So the real question isn't just who's going to win the battle for your wallet. It's about what the entire world of finance is going to look like when the dust finally settles. And believe me, this fight is just getting started.